Hey everybody, Tradius Trades back with another red pill COT markets setup video. And what we're going to look at today is coffee. But before we get to that, just remember there's real risk involved in trading, and I'm not telling you what to go and buy and sell here. This is to educate you and to entertain you, hopefully. And then the other thing is I'm giving credit to the man, the myth, the legend, Larry Williams, the one that came up with the concepts, both fundamental and technical, that I use to navigate these markets. So let's get to it. What's the setup market in the video this week? Well, if you look at this chart, you might know that this is coffee, July contract. So coffee is set up for longs. Let's take a look at why. So underneath the hood of this market, we see the commercials, the red line, based on a COT index look back period of 26 weeks. The commercials are very, very long. Okay, that's bullish code number one. I also like to see that the small specs, the green line, and the large specs are getting very extremely short relative to their positioning over the last 26 weeks. So that's nice to see. Now, what's the next thing we see is that the bearish sentiment, advisor sentiment, is getting quite extreme. So these are the guys that are going to tell their clients what to buy or sell. They're telling everybody, sell coffee, sell coffee. And they are getting to an extreme. We see when they get to an extreme, especially when it's in alignment with the trend, which is another reason why I really like this setup, is we're in alignment with the trend. The 50 period moving average is sloping up. We're also in an upsloping 18 period moving average environment, although we did just have our first full range bar on the weekly close below it, which isn't necessarily great, but still, the main thing is that the 50 period moving average on the weekly is trending up. So that's why I really like this setup, is this setup is in alignment with the trend. So what I also think is interesting, worth noting, is the commercials have been generally very long up here at the highs, which is very uncommon. Typically we get a big pullback, then they get long, and then it goes up. The last time they were in this extreme was back here in December of 2024 in January, and what's interesting is they were getting really bullish again at higher prices. Coffee moved up, they started buying at the highs, and then we had this other big huge move up. So that's what's kind of interesting about what's happening right now. Also, they're more long here than they were back here, and we're at a higher price than they were back here. So that's another interesting thing that is worth noting, fairly rare, and I would say quite bullish overall. So let's take a look further under the hood of this market. What do we see here? Well, these are the net positioning lines. What I like to see is this little bubble forming. So we see the net positioning lines of the red, the commercials going up, while the blue line, the large specs, is going down. It creates this bubble here. It looks like a bubble, right? You see them here, you saw them here. Happen at market turning points. So taking a look at open interest, what's interesting about open interest here is how low it is. So generally speaking, a lot of times major market lows are found around levels where there's extremely low levels of open interest. Not all the time, but generally speaking, there can be. It's one thing that can be found at market bottoms. So what's interesting here is open interest has been declining a whole lot, and the only interested party really is the commercials. They're getting extremely, extremely long. Another thing that I like to do is draw a line here representing a year. That represents approximately a year. What do we see? Putting it on the net positioning lines of the commercials, we see that they're basically the max long they've been in over a year. In fact, the last time they got this long was back in December of 2023, and that was way back here at way lower prices. So they have the same positioning they had way back here, but were priced at way higher levels. So to me, that is extremely bullish. Now let's take a look. The seasonal is quite interesting on coffee as well. So why is it interesting to me? Well, look at this. We're approaching a major seasonal low point in mid-June. So we're at May 31st today. So at the end, by sometime mid to end of June, there should be typically a major seasonal low. So I'm really curious to see if price can bullishly diverge from this. So what I mean by that is, typically this bar here, this low, the low in June is lower than this low. Okay, so that would look like something like this. If the price was in alignment with the seasonal, that's what's going to happen. Coffee's going to keep going down, and we're going to make a low some time around there and then have a big rally until February. Now, what I'd like to see is, can coffee kind of rally and actually be higher by the time middle of June? rolls around. If that happens, that is bucking the seasonal trend. That is bullishly diverging from the seasonal trend, which would give us nice confirmation that this seasonal, in alignment with all the other positioning things and sentiment and valuation I just showed you, this seasonal probably has higher likelihood of actually playing out. This downward move is occurring on decreasing ADX. So ADX implies trend integrity. So this down move lacks integrity. So that's a bearish kind of code as well. So that's most of the setup. There's one other thing which is so important to go over, and I'm going to flip over here to barchart.com. Here's the coffee, and what's really interesting, this has been going on in coffee for quite a while. Oh god, I didn't mean to do that. Sorry about that. Looks like we're buying a barbecue today. So what's interesting is the pricing structure. So we see here the July front month contract, which is right here, the most volume and open interest is the July contract right now, trading at 342. September contract trading at 339. Next month out, 335. And each contract we go out, the price gets lower. That is abnormal. What that implies is that the people that really need coffee to run their businesses, so think about Starbucks and Van Hout and any other, Folgers and those companies that coffee is the product they sell, and they make products surrounding them, they are willing to pay a premium to acquire it now. That's not a normal market structure for pricing. Typically, the front month is priced lower than the next month out. The reason being is the further out into the future that a person agrees to deliver it to you, they have costs. So the person that makes these coffee beans have costs to cover. They have to insure their coffee beans. They have to protect them. They have to store them. They have to transport them. They have all these costs associated with carrying it out into the future. So typically in these natural resource commodities, the price is more out into the future. And it's often a misconception. People think that that's bullish. It means it's more money out in the future. No, but that's not necessarily the way to interpret it. What's really interesting here is that the commercials, the people that are the biggest forces in the market, they're willing to drive this market into a premium all the way out into the furthest contract out in the distance. So that's a premium pricing structure, and that is very bullish. Now, I'm also keeping an eye on the spread. So this is the front month contract on this bar chart here. And then down here's the spread. This is taking the front month minus the next month out. So right now, the spread is a little bit weak. We're making higher highs in price here, but the spread has been making, I'll try to just move this so that you can see it. Spread has been making lower lows. So that implies not great demand for the front month. But what I really want to see is I want to see this spread start to pick up. So we see that, price has been making much lower lows while the spread has been making lower lows, but not quite as much. We also see on the selling the last few days is that the spread has been picking up, which that implies strong demand for the front month. So that's the setup, you guys. There's the setup conditions. Now let's go take a look and just take a peek at the technicals, because there's some other really interesting things that make this trade really high on my radar of trades to prioritize watching. So let's take a look at the monthly chart. From a technical perspective, it's pretty easy to see. Coffee is very strong. It's very, very bullish overall. Now, we did just have an inside bar that closed right on the lows. That's a lot of times when markets close right on the lows, that's a good turning point. Look at the last time it happened back here in September. Closed right on the lows, and that marked the bottom. Now, what I'm seeing is, first of all, we're in a 50-period monthly moving average uptrend. We're in an 18-period monthly moving average uptrend. So we're in an uptrend. We're in a monthly downswing, which does imply that there's some bearish momentum in the market right now, which isn't surprising if you just look at the daily chart. We are in a daily downtrend. But what's really interesting to me is this. This is the percent R down here, and we got the 4-period percent R closed very oversold on the monthly here. Look at the last time that we got the 4-period percent R closing in that area. Well, that was a major market bottom. It doesn't happen very often, and basically the thinking is we're in an uptrend. These buy signals should be very potent. So this is just a nice confirmation for me. The market is in a strong uptrend. We're getting very oversold. Look at the last time even the percent R even poked below just the halfway mark of this oscillator, and that was just a beautiful time to buy. Same thing back here. So that's very interesting to me. So what would I be wanting to see to actually take a trade? So, and not just before we go there, I'll just take a peek at the weekly as well. So the weekly here, we are in still a 50-period moving average uptrend, and we're getting extremely oversold on the weekly. Not surprising based on the monthly being oversold. But what we see is the 10 and the 14 period, the red and the orange line, are starting to close oversold. Look at the last time the orange period closed oversold. Mind you, this is the biggest retracement beyond the 18 period moving average, which is the blue line that we've had in a very long time. Since the bullish trend changed, the trend switched bullish back here in December slash January 2024. We haven't had a really 2 weeks spent below the 18 period moving average. So this is a very big dip. But that being said, based on all the fact that the trend is up, the commercials are buying the hell out of this market up here. It's really undervalued. The sentiment is extremely bearish, and the bullish pricing structure just tells me that we're going to want to take longs in this market when the opportunity is presented. So let's take a look at the daily chart, see what I'll need to see, show you what I'll need to see in order to get involved in this market. So I'll tidy this up a little bit. I'll get rid of the market structure. I will get rid of actually, that's all I'll get rid of. So right now we're in a downtrend. So how do I define trend? Well, I use the moving averages to define trend. And so right now we've had 2 full range bars close below the 50, and we followed through the low of those 2 bars. So here's those 2 full range bars below the 50, and in this case it happened to be below the 18. And then we traded through the low of those bars. That is a confirmation that the trend is bearish. So what I will need to see is price trade up above the 18. Since it's set up, and since we're in alignment with the monthly trend, and all these things are very bullish, if we get an 18 period moving average trend, I will be satisfied with taking long. So what that would mean is price would have to trade up above the 18 period moving average, and we'd have to have 2 full range bars above the 18 period moving average, none of which are inside bars, and then I need to see price trade through the high of those 2 bars, and that would give me a bullish trend change. And ideally at the same time it does the same thing, getting above the 50. So what's the game plan for coffee right now? Well, we know the setup conditions are very bullish. That doesn't mean that this market will just turn on a dime and go long next week and we're going to have just a beautiful long trade. In fact, to the contrary, this market could spend quite a bit more time going down. It could, in fact, look at this. Since we've had this trend change, we have never tagged into the 50-week moving average, which is this black line. So is it heading for that? I have no idea. But what I'm getting at is until the 18 period moving average trend has changed, you're better off taking shorts in coffee and being aware that once the trend does change, you're in an environment, or you're in a market that should theoretically have a pretty nice move. There's no way to predict exactly how long and sustained it will be, but it should be the sort of trend change that once it happens, you can be confident in working the trend in that direction, whether that just be short-term oversold pullbacks that you buy and you get out relatively quickly and just keep working the market until it, changes direction again, or you try to get into a bigger swing. So basically, for now, shorting coffee is not a bad play. We're below the 50. We are below the 18. We're in a confirmed downtrend. Overbought pullbacks like we got back here after we confirmed the downtrend, though that presented a pretty nice short opportunity, right? If we would have got short at the low of that day and just trailing our stop, or maybe you have a extension target from the extension of this swing, decent little trade there. Not great, but not bad. It was a winner, at least. Not great risk reward though. So that's kind of what I'm seeing is work the short side on coffee cautiously for now, and then once that trend changes though, very good odds that it'll be a nice little market to work on the long side. So that's the setup, you guys. A bit longer this week because I want to spend a bit more time reviewing the technicals and also showing you guys how I plan to work the market that we're overviewing. I don't want it to be have anybody misinterpret what I'm saying, because these markets can take a long time to change trend. For example, in the euro takes, once you get a setup in the euro, the average setup takes about 20 trading days to have a trend change from the date the setup is formed. So that means you got 20 days to potentially work the other side of the market before the trend reverses. And it gives you a bit of an idea that these things don't happen instantly. They're an early warning sign that we want to be aware of and potentially work the other side of the market before the trend changes. Some of these setups go on for months, like up to 50 trading days. So you know, if you tried to pick the bottom for that whole setup, you would have got destroyed. So just keep in mind early warning signs. You're better to wait for a fairly strong trend confirmation than work it in that direction. So guys, if you like this video, make sure you like, subscribe, and share. Follow me on X. I am Tradius_trades over there. And if you want to get into my free Discord, just shoot me an email, tradiustrades@gmail.com, and I'll be happy to get you in. Hope this was valuable to you guys, and I hope you have a great week trading next week. And I appreciate your time listening to me, and we'll talk to you soon. Bye-bye.